Welcome back to Yahoo Finance. We're coming up on the closing bell here, where we have had a turnaround today. Earlier in the session, Dow was off as many as 458 points. We're going to close in the green on this session on the S&P and the Dow, and looks like the NASDAQ as well. Only the Russell here closing out the day in the red. So again, some sell-off this morning to turn around here this afternoon. That's going to do it for us today. The closing bell on Wall Street again. We had been down across the board earlier this morning after another jobless claims print that, while expected on many levels, still showed really the scope of how bad the labor market is. Yet again, the 8th straight week where we have had multi-millions in claims here. The market, though, not paying too much attention to that right now. We're going to be looking ahead at all of the economic data that we have coming out tomorrow, and there's a lot of it. In terms of trading today, I want to bring in my co-host, Myles Udland. I mean, Myles, really a move here on the close to the upside. We reversed. We were up just about 200 points, around 130. It continued here for us to close near session highs with financials, which we have been watching here so closely these last few weeks, tacking on just about 2%. What are you keeping an eye on?
Yeah, nothing catalyzes a market like news that the Mall of America will reopen on June 1st. Obviously, that's the big no. But I think you mentioned the banks. I mean, they have been, the laggards all the way. And we've talked about them ad nauseum earlier this week. We had, consecutive sessions where the KBW Bank Index was down more than 3%. We looked at, shares of JP Morgan were 45% off their most recent highs during yesterday's session. And so, obviously these names remain beaten down, but in a market environment like this, and, as Jared spoke to last hour, and I think we'll get to him in a bit as well, the technical setup here is such that the bears are fine with the S&P up to about 2860, 2852 is the close today. And when we chop in these wide ranges, you're going to have days like today where Capital One shares are up 9%, Wells Fargo shares are up almost 7%, because these names have been, again, they can't go down every day. We've seen names, the airlines have gone up 25% in single sessions amid all of this volatility. And so in some ways, it's constructive that, there was a 900-point Dow rally from point to point during today's session. On the other hand, this kind of increasing volatility in the market, and we talked so much about this back in March, 3% moves up or down aren't really good. You don't want the stock market to move 3% in a day. And on an intraday basis, we got about a 3% move today. So certainly a rougher environment than we've seen. I guess you feel better when stocks are higher, but overall, after a somewhat placid period for the market, when the VIX came from almost 90 back down towards 30, things seem to be calming down. But this has, a little bit more of an unsettled feeling, I guess, than we were talking about just a couple of weeks ago.
Rick Newman, you heard it from Myles. I mean, nothing moves the market like the news that the Mall of America is reopening. To that point, though, I mean, this still is a reopening trade. This is what is on investors' minds right now. Looking at XLY, up 1% here on the session. We have names like MGM Resorts up 5.5%. Hilton up 4%. Tapestry, there you got a retail name in the mix, up almost 4%. So the optimism that we talked about last week, is that really back? Or to Myles' point, is this really a technical trade that we're seeing based on some of the numbers?
It feels like traders are just clinging to every little shard of good news they can find. I think we also got a Bank of America report today saying credit card spending was up, probably because of the stimulus checks people got. Meanwhile, in Washington, we had this infectious disease expert testifying before Congress saying, if we don't get this right, this outbreak could be as bad as the Spanish flu in 1918, which killed 50 million people. But I guess that's just being considered a political sideshow. And if the markets and if investors hear some part of the country is reopening, that's good enough for 2 or 3% in the S&P.
To your point, that Bank of America credit card data showing meaningful improvement, although we do know JP Morgan saying U.S. credit card holders had spent 40% less due to coronavirus.
Market doesn't care. Market doesn't care about the bad news. Just tell us the good news.
What, Rick?
Market doesn't care about the bad news. Just tell us the good news.
Yeah, I mean, they're latching on to the good news here. But Akiko, I want to bring you in on this because this is a consumer-driven economy. A lot of people are saying don't pay attention to what is happening in other parts of the world as they're reopening. We are a different setup here. So we're going through a different reopening as well. The debate continues between has this market priced in way too much? It's gotten far ahead of itself. We had all the news from your David Teppers and Jay Powell's earlier in the week, but still this market goes higher here, again.
I mean, to the question of whether there is too much optimism, it seems like the answer is yes. I mean, we say this every week when you look at the economic data and sort of this divergence between what we're seeing on the economic front and then what we're seeing in the markets. But of course, we always have to remind ourselves that the markets don't represent the economy. Now, to that point, we got this other note from Goldman Sachs today, reassessing the unemployment numbers here. They're now looking at a peak of 25%. That's much more significant than the 15%. They're also looking at a contraction, a decline in the GDP in this current quarter of 39%. I mean, that's a pretty significant number. And so what we're seeing is on the economic front, at least, despite the optimism you see in the markets, on a weekly basis, you could even argue a daily basis, there is a constant reassessment that's happening as we start to get the reports in on the earnings front, but also state by state as they continue to start this reopening process. And I think there is still a lot of complacency that we're seeing among investors because it still doesn't seem like we have a full grasp on the economic impact yet.
I know we just wrapped up this day of trading, but I'm already looking ahead, Myles, to all the economic reports that we're going to get tomorrow. And it could be a pretty ugly day just in terms of the raw numbers that we're going to get. Retail sales, it could be down 20%. Empire Manufacturing comes out, that could be down 60%. We've got UMich. What do you make of the setup or the expectations coming for these numbers that, yes, we know they're going to be bad, but are they market moving?
Probably not, right? I mean, like if you think about it, we know that based on claims, like 30 million people have been laid off. So at least 20% of the workforce has been furloughed or laid off, probably more than that. So yeah, obviously retail sales are going to go down a lot. And I think it certainly drives the public and it drives us, frankly, a little bit crazy to talk about how all this bad data has already been discounted by the market. But that's the game. Those are the rules. And so I think, tomorrow the retail sales number is going to be, we can pick our adjectives. Grisly is one that I've leaned on probably way too much when describing economic data, but that's the situation. And the question is, will things get relatively better? Are they getting relatively better now? And, as you noted, the Bank of America data suggests yes. And the market wants to know that we haven't, it's been now 3 weeks since I wrote a story that the economic data has bottomed. And if that continues to hold, the market is probably going to at least hang in there amid all of this bad